Welcome to this webinar on financial training and needs analysis within that. Before we get into it, just an introduction about me, the speaker. I'm Kevin Amor. I'm the principal at Acumen Financial Training. And here's just a little bit about me. I'm a chartered accountant trained with Pricewaterhouse. Before going into management training, I worked in commerce as a financial controller, finance director for about 12 years. And I've now been in management training for also 12 years. And I design and run courses and also do one-to-one coaching. And also I work with various business schools as visiting lecturers on various MBA programs. Okay, so into financial training analysis. And what are we trying to do? We're trying to avoid certain common problems that arise. I think in my experience the most common one is the fact that a lot of people in HR companies, when they are asked to run finance courses, don't really have a great understanding themselves of finance. And this is a two-way process. Quite often the people who are asking them for help don't know that much, hence that they need help, but they come up with some sort of globular, I need financial training, and everyone's running a bit blind, not really knowing precisely what that means. So we're going to spend a little bit of time today just looking at some of the common areas that where financial training is required and what it means. And then following on from that will lead to a little bit more confidence in commissioning financial training. Instead of just putting everything into the lap of your provider and saying, give me financial training, you can now be a bit more precise in asking and probing for what you're looking for. And I'm going to put this into a context of how I would approach financial training in today's sort of training world. I think people have given up on the idea of lecturing and realised that the best courses aren't done by sort of an academic approach. So what you try to do is take relatively small groups, say maximum 15, 18 participants, and try to give them collaborative work, get them working together, bouncing ideas off each other. After all, that's how good management is done, be it in finance or strategy or any other departments within a company. That collaborative work needs to represent authentic activities. In other words, it should represent or be very, very similar to the sort of decisions and sort of data that they're going to see in their day-to-day work. And as I've said before, the days of people sitting there for a day or 3 days listening to someone go on and on about finance are long gone. So you want to be avoiding or minimizing lecturing and the Harvard-style case studies. Which nowadays, or even today, academics will insist on sort of wheeling out on these sort of courses. So what are the reasons why your staff might need financial training? Well, here's 4 sort of general areas. I'm really going to concentrate on the first one, which is they need to understand finance in order to improve their own participation in their own business, in your own business. So typically we're talking about managers or some kind of decision maker within your business. And that's really what this webinar is going to focus on. There are other areas that I've encountered. For example, you may be a professional consultancy and you may need to understand where your clients are coming from and how your advice and consultancy slots into their financial objectives. So the second one is the key measure here isn't that the people you'll be training aren't necessarily decision makers in their own business, but need to understand the objectives of their clients. It can just be seen as general business knowledge. You know, a number of people send their staff off on MBAs and so forth. MBAs don't particularly improve business performance, but it just gives you person a lot more confidence and general sort of knowledge and terminology around business. Some of your staff may be taking exams or some sort of form of other assessment. Chartered this or that. This webinar definitely won't be approaching. That's a very sort of specialised field of training where really you'll be looking to sort of companies who all they do is get people through for exams. They're not really training people, they're really more sort of coaching them and drilling them to pass the exam, which is slightly different to what we're doing here. So let's concentrate on the first one, which is understanding our own business and the kind of reasons why you may need to understand finance within your own business. And I've got sort of 5 general areas here. Managing and preparing budgets is overwhelmingly the biggest sort of area that we come across for people, particularly new managers, but older managers who've kind of had to sort of learn it on the cuff as they've gone along might want something a little bit more formal, some sort of templates in place. Managers or staff may need to understand results for various reasons. They may need to explain performance and they need the language and skills to do that. Very much related to some of the previous levels, but I've shown it separately, is controlling performance. In other words, making decisions to sort of improve things, understanding where the levers are that improve performance. And the last one is something called decision making, which is essentially how we decide financially where to spend our money and the tools that we use to achieve that. So understanding, reasons why, areas around managing and preparing budgets, understanding the company's budgeting system. This is generally an area that you really want the in-house finance department to be very involved. After all, they're the people who design the budgeting system, and they'll know the sort of outputs they're trying to get from it. So it's very important that they explain the inputs that they're looking for and explain the outputs that are coming from it. Your staff will generally need to understand a framework of budgeting. Why do we have budgeting? What are budgets meant to represent? What's the information telling you? What sort of formats is information put in and come out again? So you might want a kind of theoretical base around this based on your budgeting system, but this is an area where very much you should be looking in-house to get people to home up and give the very sort of applied understanding of your own budgeting system. Having got the results from a budgeting system, you'll have staff who want to be able to do something with it, understanding what it means. And so we're looking at here what various measures tell us. Knowing that an operating margin is 10% doesn't tell you anything. You need to be able to benchmark. First of all, what does an operating margin mean? What does return on capital employed mean? What is capital employed? People need to understand what these measures are. They're quite often given them and just told the higher this is, the better. Why? And then you'll want them to do something with that. In other words, you want them to affect some change on the basis of those results. And so to do that, they need to understand what the figures are telling them. And from there, what are the drivers of performance? What do we need to do to improve those figures? What goes into to make up those figures, and therefore what goes in to improve them? Part and parcel of this step of being able to make an improvement is to be able to sort of drill down into results and look at what we call variances. You budgeted, you had very good reasons at one point for assuming this was the results you'd likely to expect. Then you get actual results. Why are they different? What assumptions did you make that are no longer true? What dynamics within your business have changed? So understanding what variances mean, quite often companies use this as a way of bashing staff, and that's not what it is. It's about moving one's understanding from where you were when you formed the budget, which could be a year or even 18 months earlier, to where you are now, and being able to bridge that gap as to where your business has gone, being able to drill down and see where the changes are. And then once you've done that, once you understand where the changes are between your prior understanding and where the business is now, being able to go back and alter changes. What can you change? What levers can you pull? What knock-on effects will there be within the business if you make those changes, and will they be positive? So characteristics of this area, you definitely need this to be tailored. Budgeting systems are very bespoke and unique to companies. You might want some theoretical areas around it, but you want to be able to reflect the company's business, the system, and the indicators used. In order for people to learn this, they need to be able to have a go at this. This is an area where I would use software technology, some sort of system that sort of broadly reflects the budgeting system. In other words, staff need to be preparing and analysing budgets, need to have a go at this. And this is an area where you very much want input from the company's finance departments, talking specifically about the measures and the systems. So in terms of key financial areas, clearly budgeting, the income statement and profit and loss, what they tell you, what performance measurements you use and therefore what they mean, and variance analysis, what it means, how you read it, how you affect change from it. Another area that internal managers will be interested in is understanding results. This can be just for general management. How well are we doing? Where could we be doing better? What do I need to change? And then driving improvements and change through the business. Managers may be told, you need to improve this measure, you need to improve this area. And not just financial, we can have, as you know, the balanced scorecard approach. There can be a number of non-financial measures. And managers need to be able to understand the finances that are put in front of them. They need to know where the levers are to change and to pull in order to affect change. So you need to understand the company's financial information, hence some sort of tailoring would be required here. Participants need to read and benchmark. They need to be actually getting their hands dirty, rolling up, be given some company-like data, and making some judgments, analysing it, saying this is what I think it means, this is what I think has to be done differently. And therefore an application of KPIs, key performance indicators. Part and parcel of this is understanding that different companies are going to have different results, different forms of financing. So understanding how your business model is going to be reflected financially, so you know what to expect. So here we're looking at the financial statements, mainly the income statement, but other companies may have a balance sheet emphasis, key performance areas and indicators, and benchmarking. Another reason your staff may want training is to explain performance. This can be internally, particularly where you're driving improvements, part of change management, being able to explain to others why things need to change and how you intend to change them, or indeed how they should change them. Or being able to explain performance externally. For example, you may have more senior managers who are meeting investors, the banks, taking part in negotiations for joint ventures and merger and acquisitions work. A lot of this area is around having confidence in the terminology, financial terminology, and I would approach this through preparation and deliveries of presentations, ensuring that they're using words correctly and terms correctly and that they understand them themselves. In terms of dealing with external parties, understanding what it is external parties are looking for, if it's the bank, investors, possible JV partners. What are they looking for, and therefore what are the kind of measures you should be explaining to them and emphasising. And therefore part and parcel of this is understanding key performance measures through having a go at analysing and benchmarking. So terminology, both the new international terminology that we're now using and of course the sort of more traditional UK measures and terms, looking at drivers of finance and investment decisions from an external perspective in particular, and key performance measures. And the final area that internal staff may be interested in is decision making. What does this mean? Assessing where to spend your money, looking at the options and then prioritising them. And then once you've done that, going back and saying, well actually, was that a financial success? Was it as successful as we thought it would be? There's two parts to running courses like this. How does the company itself already use techniques for allocating funds? And how might these be improved? So here I think we'd be introducing the various sort of frameworks that the business would be using, and also the various theoretical improvements that are around, and having a practice in using all of these techniques. So what you're looking at are decision-making considerations, what type of information forms part of your decision and what doesn't, investment measures, so common ones, ones your business would use, as well as other ones that other businesses use, return on investment, etc. And then a general area is called discounted cash flow, taking into account what's called the time value of money, and this is now considered by most businesses the best way of evaluating where to spend your money. And then I'll just leave you some thoughts on me, Kevin Amor again at Acumen Financial Training. These are some of the companies that I've designed and run programs for. If you would like me to talk to you more about running financial courses for you, please feel free to contact me via the website. Thank you very much.